Thanks, Jeremy, and thanks and good evening, everyone. I'm going to talk to you all things uranium this evening. Our business is very simple, so I've only got one slide on the business and about 12 slides on the sector and the industry. We are seeing a resurgence of nuclear and the uranium price, and that's been driven by a number of key themes. 3 on the demand side and the 4th on the supply side. Uranium being a commodity, it's all about supply and demand and how that impacts and flows through to price. The first thing that's driving the uranium market and nuclear sector is the energy transition and the drive towards carbon neutrality. Secondly, we're seeing a growth in the global nuclear market for the first time in a long while. Energy independence and energy security became a big issue 2 years ago when Russia invaded the Ukraine. And I've got a slide to just put Russia in the context of the global nuclear fuel chain. And the 4th and final point is the supply side. We've seen huge underinvestment in the supply side for a long time, for a decade. And if you look at the supply side in nuclear, it can take up to 16 plus years to get a exploration project all the way into commercial production. And that's what we're seeing at the moment. And if you look at the price chart on the slide, you can see what the uranium price has done over the last 5 years compared to some of the other commodities. Just quickly on Yellowcake, I said it's a very simple business. We have a buy and hold strategy. We own physical barrels of uranium. There are only 3 storage locations in the West where you can store uranium. There's one in the US, one in Canada, and one in France. We store most of our uranium in Canada and some in France. These are regulated facilities. They're essentially outdoor warehouses. The uranium stored in 55-gallon drums, 4 high, because each drum weighs half a ton, and you stack more than 4 drums on top of each other, it crashes the bottom one. So it's people have visions of a very secure environment, but it's not, because it's difficult to move. As I said, we offer pure exposure to the uranium price. We don't have any exploration activities, any processing, any mining. It's just simply the uranium product that we own. We have a deal with Kazatomprom. That's the world's largest producer of uranium. It's a 10-year agreement that was put in place at the time of our IPO in 2018. And we are able to buy up to $100 million of uranium per annum from them. But we only do this when we're trading at or above our net asset value. If we issue equity below net asset value, we dilute our existing shareholders, and they're not very happy. As I mentioned, we inventory stored in 2 jurisdictions, Canada and France, and then we have a very low-cost structure. We've only got 2 full-time employees, myself and the CFO. We both work from home. Carol's in Luxembourg. I'm based out in Surrey. We don't have an office. We've outsourced our accounting, bookkeeping, corporate governance, company secretariat activities, and also the uranium transactional activities. So we target a cost base of less than 1% of our NAV. Last year we were about 0.6%. The costs are predominantly, we have to pay for storage, and that's not cheap. We pay for uranium transactional activities, and then we have the usual costs of listing fees and audit fees and those sorts of things. Just moving on to our balance sheet. Again, very simple. 21.7 million pounds of uranium, priced at the uranium spot price of $83 a pound. We've got an asset value of $1.8 billion. We've got a little bit of cash, but that's it. There's nothing else on the balance sheet. No debt, no hedges. It's what you see is in front of you. Just a brief history on Yellowcake. We came to market in 2018. We IPO'd, raised $200 million, bought 8 million pounds of uranium at $21. That was our first purchase and introduction to the London market. In fact, I was here 6 years ago when we sort of rang the bell and listed the company. From the time of the listing through to today, we've raised $800 million in total. We own, as I said, 21.7 million pounds, so a market value of $1.8 billion. We have become one of the largest stocks on the AIM sector. I think we're number 4 or 5. And we're one of the most liquid. I think we are the most liquid stock on AIM. We trade somewhere between $5 and $7 million a day. So, that's kind of the yellow cake story. I'm going to now move on to the uranium market, which is kind of the most important piece. And I really want to take you back to 2020 when we had the previous US election. The Democrats came into power. President Biden put the US back into the Paris Agreement. Remember, Trump had taken the US out of the Paris Agreement. And really from that time on, we saw a lot of policy supporting nuclear. Here in the UK, we had targets of 2050 carbon neutral. And across the globe, you saw, as of today, over 100 companies have made commitments around carbon neutrality. At COP28, we saw over 20 countries commit to a tripling of nuclear, by 2050. And in the US in particular, if you look at the Inflation Reduction Act, there's something like $40 billion earmarked to support nuclear. I mean, it's massive. Ben was just saying to me before this conference started that it's almost equal to the market cap of the whole uranium sector or nuclear sector. $40 billion is a big number. And now, on the back of that support, and I'll talk a little later about the hyperscalers, but we saw 14 international banks, including Citibank, Goldman Sachs, Morgan Stanley, all support tripling of nuclear by 2050. If we look at electricity demand growth, which ultimately translates into nuclear and uranium demand, two factors driving it. Growth of the middle class in the developing economies, and now proliferation of these new technologies, data centers, streaming, AI in the developed economies. Just looking at where the growth is coming from. If you go back just over 10 years to the time of Fukushima, China had 17 reactors. Today they have 56 reactors, 31 under construction. They're looking to approve 8 reactors a year. I mean, China can build a nuclear reactor now in 5 to 6 years. So they have industrialized the sort of building of nuclear, where most of the countries in the West have forgotten how to build nuclear. If you look at the 2 big projects in the US, 15 years over budget, beyond schedule. Here in the UK as well, it takes a long time to build these nuclear reactors in the West. But in the developing economies, India has 22 reactors, 7 under construction. UAE have just commissioned their 4th reactor. They built 4 reactors, supplied by the Koreans on time, on budget, and now looking at a further 2 reactors. Looking specifically at China, the US is the largest reactor fleet in the world today. 92 reactors generating about 100 gigawatts of electricity. Second is France, and then you've got China. If you look at China's existing fleet of 56, plus the 31 under construction, plus what they plan to have completed by the end of the decade, we're going to get to 2030, and China's going to overtake the US in terms of reactor fleet size and uranium demand. Just talk quickly about hyperscalers. It's a nice name for the Googles, the Microsofts, and the like. And there's been a lot of attention on that in the last month or so. We've seen the Amazons, the Microsofts, the Oracles, NVIDIAs, Googles, all talking about supporting small modular reactors and nuclear to support their data centers. I mean, the data center CapEx this year is $270 billion. If you look at just the data center growth in the next 3 years, it will equate to what Japan consumes in terms of electricity today. I mean, the growth on that side is absolutely staggering. And you've got companies with massive balance sheets who are supporting this. What's $1 billion or 2 or 10 to a Google or an Amazon? It's probably a few hours of cash flow. So you've got support now from really big companies who have no alternative. You can't run a data center on wind and solar. You need 24/7 dependable power, and a lot of these deals are now being done bilaterally. So you're not even relying on grid infrastructure. I mean, the first deal that Amazon did with Tallinn in Susquehanna, it's a data center directly connected to a nuclear power station. So, all of this demand is sort of supportive of nuclear capacity and uranium demand. If you look at demand today, or production today, it's around 150 million pounds against consumption today of about 180 million pounds. If you look at this chart, we're talking demand of 300 million pounds by 2035. So in the next 10, 11 years, we need to double the production capacity of this industry. And as I said, it takes you 16 plus years to go from discovery all the way through to production. So it's a huge challenge on the supply side. Another feature of this industry is long-term contracts. Because the fuel cycle is very long, it takes about 2 years, 18 months to 2 years to go from uranium oxide, which is what we own, to fuel rods and fuel bundles that will go into a nuclear plant, a nuclear machine. So utilities contract for about 85% of their needs under these long-term contracts. So they would buy uranium, contract for uranium today, delivery starting in 2 years' time, and the contract would run for 5 years. And what we can see here is the European utilities are fairly well contracted through to 2027, 2028, but the US is not. When uranium prices were low, we saw a period of US inventories, or utilities running their inventories down. Then we had the Russian invasion, and there was the whole focus on the front end of the fuel cycle, being enriched fuel and conversion. And now we have the ban. As of August, Russian fuel into the US is banned from 2028, but there's a period of waivers between now and 2028 where it's up to the DOE to allow utilities to continue to purchase under the Russian contracts. So you've had a situation, I think last year, 160 million pounds were contracted, 20 million was done by the US, and that's a country that consumes 45 million pounds. So this uncertainty around the Russian invasion and the Russian ban has sort of pushed the US utilities to step back a bit. But really the message here is there's huge pent-up demand that has to be fulfilled. A nuclear power plant can't run without nuclear fuel. If you stop a plant because of a lack of fuel, it'll cost you hundreds of millions of dollars to restart that machine. So it's not like a coal plant or a gas plant. And also in uranium or in nuclear, the fuel component is a relatively small component of the overall cost. So, for nuclear, maybe with today's elevated prices, it's 15% of your operating cost is the fuel. So for a machine that has to run, the costs of shutdown is extreme, and the fuel cost is relatively low. These utilities have to contract, they have to come back to market. Just talking about the, geopolitics around nuclear, and the US, the biggest nuclear fleet in the world, and it doesn't produce any uranium domestically, nothing to speak of. Historically, the US used to produce north of 35 million pounds of uranium. All of that infrastructure is gone and depleted. So you've got China, which has very little quality domestic uranium. It purchases abroad, and it owns mines. So the two big operating mines in Namibia are owned by the Chinese. France doesn't have any domestic uranium. They've got deals abroad. South Korea. So the consumers of uranium are not the producers of uranium. I'm just sort of straying to the Russian invasion a little bit and put Russia in the context of the nuclear fuel industry. Russia produces about 11% of the world's uranium, but it has 35% of the world's conversion capacity and 45% of the world's enrichment capacity. And you can see, what happened on the back of the Russian invasion to the prices of enrichment on the left and conversion on the right. Enriched fuel is the fuel that's ready to go into a machine. Conversion is the process of converting the oxide into a gas, which then gets enriched. So those two sectors have responded way more than the uranium price has because they're closer to being needed. So, what's going to happen now? The technology exists to build enrichment and conversion in the West. It's an industrial process, but it's going to take time. It probably takes you 3 years to build conversion facilities and, maybe up to 5 years to build enrichment facilities. Now, we have seen two announcements recently. Urenco and Orano have both announced expansions of enrichment capacity, but we haven't seen anything yet on the conversion side, and that's probably the biggest bottleneck in this nuclear fuel cycle. So really what's going to happen going forward is we're going to see a bifurcated market. The West and Western-friendly countries will have to source their uranium fuel, nuclear fuel needs from countries other than Russia. Russia will continue to supply China. They will continue to supply Pakistan, India, Middle East, Brazil. But today, 75% of the consumption of uranium and nuclear fuel is in developed economies, the US, France, broader Europe, Japan. So we're definitely going to see a bifurcated market going forward, and we're seeing that already. And then if you look at the global supply side, so on the demand side, we've got 440 reactors in 31 countries producing about 10% of the world's electricity. Very distributed demand. On the supply side, we've got 4 countries producing 75% of the world's uranium. 5 mines produce 50% of the world's uranium. Very, very concentrated. And on the supply side, Kazakhstan and Kazatomprom are very, very important. Kazakhstan supplies about 40% of the world's uranium needs. Today, about 50% of that uranium goes to China, and increasingly more of it will go to China and to Russia. It's become very hard for Kazakhstan to export to the West now with the Russian ban. They used to rail it across Russia, out of St. Petersburg and off to the West. Now they're having to go across 4 countries, Azerbaijan, Georgia, and across the sea, going from rail to barge to ship, and it's just becoming too hard. And the CEO of Kazatomprom made a comment not that long ago, a few weeks back, basically saying it's just easier for me to sell to China and to Russia. And I think that's another factor that's going to weigh on the utilities in the West as to where they're going to get their uranium needs from. So if you put all of this together, positive demand story. So when we IPO'd, demand forecasts were about 1.5% of demand growth per annum. I think now you're talking 3.5%, 3 to 3.5% of demand growth. Again, when we IPO'd, there were a whole lot of projects on the drawing board. Not a single one of those projects have started construction in the last 6 years. And if you look at the grey bars, how many, all of that is restarts and greenfield production. And it is absolutely needed that supply is needed to meet demand. So you've got a situation now in the mining industry, it's legendary that mines never come on stream on budget and on time. So if you shift those grey bars out even a year or two, we're going to get into a situation with an acute shortage on the supply side. I don't see any meaningful supply coming on stream, maybe even before the end of the decade. So that's the story in this industry. Very good momentum on the demand side, very challenged on the supply side. So just to wrap up, and I think Yellowcake is very well positioned in that sense. We own 21.7 million pounds of uranium. We've got an option to grow. Grow is not essential for us. We can grow if it makes sense, if we can grow accretively, but we have scale, we have relevance, and we have good daily liquidity. I think there could be a situation in the next 3 to 5 years where you have a supply crunch, and you could get flyer pricing. So, end it there.
Perfect.